and welcome. You're watching Countdown right here on BloombergQuint Live. The markets are looking soft. We'll run you through all of the moving parts in the markets, but for now, the headlines. Markets begin this December series on a weak footing. The Nifty falls below the 12,100 mark. Most sectoral indices trade with losses. Nifty Metals is the top sectoral loser, with most constituents trading with losses. Yes Bank will hold a board meeting to consider raising funds. The stock trades flat ahead of the meet. And the government will release the second quarter GDP numbers today. A Bloomberg poll of 41 economists expects the growth to have slowed down to 4.5%. Neeraj, good afternoon. After that bumper close that we saw yesterday in the expiry, it looks like some give back today.
Yeah, that sums it up really. There's a bit of a give back today, but don't quite know if it is some routine profit booking or ahead of the GDP, anticipating maybe the possibility of slightly worse than expected numbers. Is the market wanting to be a bit light? You don't quite know. Yeah, we've had a good week. I think just to put this into perspective, while we're looking at losses today, if we can just get up this week's chart, you will see what I'm talking about, that we've had decent showing in the last few days, and as a result of which, I mean, even the 7-day chart, if it comes in, you will see that the last 4 days we've had some decent moves. This week we had a 1% gain, and large portion of the gains were, so actually we're about 2% gain sitting for this week after 3 weeks of consolidation, and therefore a bit of a pullback was probably warranted. Get the heat map up on the screen for today, and let's see what's moving and what's not. Of course, towards the end of the show we'll also tell you what's happened in the week, but look at the quantum of red in the session today. Almost all key stocks are down. Dr. Reddy's, Hindalco, so the commodity pack, Hindalco, Tata Steel, etc. Grasim has gone down in trade today. Reliance Industries is trading with some cuts. Look at this one, 1.5% lower. State Bank of India has about a couple of percentage points loss, so that one is also not doing all that well. ICICI Bank has pulled off a little bit. What is doing well is Bharti Infra. And just before I hand it over to Devina, if I can get the intraday chart of Bharti Infra up on the screen for you. We've been speaking about how on a weekly basis it's very, very volatile. Now on a daily basis as well, if you just look at the intraday of Bharti Infra, look at that. It started off with a gash of almost 4 or 5% lower in trade, or 3 or 4% lower, and then bounced back. So it just goes to show what's happening with the markets at large is happening for specific stocks like Bharti Infratel as well. Like
Indiabulls Finance.
As well.
And we should actually take a look at the intraday chart of Indiabulls Finance as well. Started positive, was almost 9.5% higher, and then you can see that big cool off that's come in. The stock's trading lower by about 11% right now. It's going to take some more time, 3 additional months of pain and not being able to conduct their day-to-day business, and the adjournment of the case by the High Court till February end. So that's what's caused the drag on the stock in this afternoon session. But a few other stocks to be mindful of, and the kind of moves that we're seeing, the mid-cap and the small-cap index for themselves, quite different in terms of the moves there. Mid-caps are down, small-caps are trading in the green, but Indiabulls Housing Finance is down 11.5%. L&T Fin Holdings, that's the one that's got 3 or 4 straight days of gains, and bulky gains. You've got the stock now up about 4% in today's session too. Went up to 122 but has come off from there. Magma FinCorp 2 is another persistent gainer over the last few trading sessions. What else is doing well? Well, Adani Group stocks, and they seem to be on a tear off late. You've got Adani Green that continues to go from strength to strength. Adani Transmission is up 8.5% in a falling market, and Adani Power 2 has got gains of about 4%. Stocks which are gaining on the back of good volumes. You've got Future Consumer, which is up 7%. Its trading volumes are 16 times the last 20 days average. Future Retail too is about 7% higher, and it's got volumes of 17 times. And NBCC up 6% with volumes of 26 times the last 20 days average. So all of these stocks, good price and volume action. And lastly, a few stocks, even in a falling market, though, are trading near their 52-week highs. You've got a Tata Global Beverages and a PI Industries. Intraday gains, not all that significant, but they're still hovering around their 52-week highs. What else is important in terms of the liquid universe? Agam is joining us right now to take us through the derivative market snapshot. Agam.
Well, we are seeing some weakness coming in after 2 straight days of significant gains on the Nifty. We're starting to see some pressure build up once again. The indices are down by nearly 1%. The Nifty futures looking at 3% increase in open interest towards fresh shorts. The Nifty banking futures also under a bit of pressure. This is where we're seeing unwinding coming through. surprisingly, even on the first day. And of course, this is owing to positions taken earlier in the week in terms of the December futures, because Sol has been in play. But besides that, in terms of the wicks, let's pull that up as well. And we're seeing just a tad bit of an increase there. It's only moved above the mark of 14. So at this point in time, we don't have too much to worry about, considering that we really haven't seen too much of a move in the wicks. Moving on in terms of your December 26 open interest distribution, while the one with the 12,000 mark, the put with the 12,000 mark stands on the higher end, it continues to see the 12,500 call, but perhaps the more important thing will be where we're seeing writing, and it starts with 12,100 itself. The most amount of writing coming through, followed by 12,200 calls. So those are the two levels that we need to watch out for, perhaps, which may provide for some sort of a resistance in the near term. Moving on to stocks, a lot of from the financial sector are abuzz. L&T Finance Holding right at the top of the list. We have an initiation from Goldman Sachs with a buy rating, and it's seeing a good up move there, 20% added in open interest. Besides L&T Finance Holding, we're also keeping a tab on Ujjivan Financial Services, also seeing a bout of buying. But moving on to some other stocks, we have Adani Ports, which is looking at fresh accumulation and open interest towards longs. Look at that, 68% increase in open interest. Sticking with the financial sector, Yes Bank, which had begun the day of trade with a lot of strength, is now under a bit of pressure. In fact, at a 2-point discount currently, its spot is down 1%, 26% added towards open interest. Let's wait and watch whether or not there is more volatility involved in Yes Bank, as has been the case over the past weeks.
Right, Agam, thanks very much for that. So, volatile stocks nonetheless, Yes Bank and India Bulls alike. But when we're talking about India Bulls, let's begin the show with that. One of the stocks in focus. The Delhi High Court has adjourned the PIL of Citizens Whistleblower Forum against the company to February 28, 2020. Shefali Malik is joining us with more details on what the implications of that could be for regular business. Shefali.
Well, first to start with the basic news. So basically, the hearing was supposed to happen today at Delhi High Court, and it has happened. So Delhi High Court has basically adjourned the hearing of the PIL against India Bulls to Feb 28, 2020, so almost 3 months. And also MCA was supposed to file its affidavit with the court with its findings on the India Bulls group, on the various group companies. So that it has done, and now the court has asked the parties to file the counter affidavit. So yesterday the stock rallied 24% in trade on the hopes of a clean chit being given to India Bulls group and also the promoters. So now with this adjournment coming in, so this does two things. A, it brings in uncertainty with regards to the outcome of this particular case, and also it will be an overhang in next 3 months. So that is why this kind of a negative reaction coming in on the stock.
All right, Shefali, thanks very much for that. So that is India Bulls Housing Finance, and along with India Bulls Housing Finance, India Bulls Ventures, India Bulls Real Estate, all of these stocks have also taken a nosedive in today's session. From upper circuit to lower circuit for Ventures, India Bulls Realty also at lower circuit. Let's begin with a market voice. Aishwarya Dadich of Ambit Asset Management is joining us right now on the show. Aishwarya, thanks very much for taking out the time. Let's talk about us being at record highs and how strategies need to be tweaked around with in order to get maximum value from investments even at record highs. What is your advice to clients?
Thank you so much. It's a very important observation that you had on the record high. I want to put a very important or interesting observations. So if you look at the last 22 months from January 1st, 2018 till now, the Indian top 1,000 companies market cap has remained flat or similar. We are still at 148 lakh crore compared to what it was almost in 1st January 2018. But during this time period, 84% of the top 1,000 companies have given a negative return. And out of which 40% of the companies, more than 400 companies, has given a return of more than negative 50%. And another 30% of the companies has given a return of negative 25 to minus 50% in the last 22 months till October 2019. What has led to this is that we have the same market cap, but majority of the companies have seen massive intense drawdown in their stock prices. There are a handful of 31 companies only which has basically compensated for all of the fall in those more than 800 companies in the last 22 months. So this is the polarization of extreme level. This shows that the kind of crisis of confidence, or the sentiments has been so adverse over the last 22 months. But going forward, what we believe is that if we look, this polarization should basically unwind. We believe it will reverse back to the mean as and when the macroeconomic environment takes see some revival going ahead. We believe the money will start flowing into those good and clean mid-cap names and the small-cap names where the businesses are strong, that where the earning growth will continue to see some momentum. So this will be the business area where the new money should find its way, and we believe the market is ripe with opportunities in that segment. So that would be the one area that investors should focus upon, that how to play this polarization theme, and in the way that should materially add value and wealth to them for the next couple of years going ahead. If we look at on the other side, the way interest rate, inflation, other macro indicators are pointing towards this, and even the formalization of economy and other compliance related and tax related benefits, this should disproportionately benefit more mid-cap names and other those kind of companies, which will see major revival in those kind of earning and henceforth in the stock prices. So we believe these are the times to basically go deeper, to basically go and rejuvenate your portfolio and look at how to play this thesis by investing more into the broader names, the good and clean names where the quality and the earning is the focus.
Do you have a published good and clean portfolio as of now that you can talk about? And if not, okay, I was asking if you have a good and clean portfolio published which you can talk about. And if not, what are those themes wherein you are finding market leaders with not necessarily a very large market cap, but therefore forming a part of the broader end of the spectrum?
Right. So we have our fund, good and clean mid-cap fund, as well as the small-cap fund. And just to highlight how this fund has been performing, so the last 2 years, mid-cap index has given a return of little less than 12% CAGR, as compared to the good and clean mid-cap fund has given a return of more than 9% CAGR in the last 2 years. So in spite of such an intense drawdown in the market, there are companies which have been showing earning growth, which are run by competent and able management, and which have been able to stand these tough times. So when you talk about sectors, the one which have done meaningfully well for us is a couple of chemical sector names. The leaders in the chemical sector, because of the revival in the chemical consumption story, because of the China issues, we have seen a lot of volume growth has come to this kind of play, and at the same time we are able to see that there is a renewed optimism in the sector as a whole. Other side has been the consumption as a sector, though we have seen that there has been so much pressure in the economy. But if you look at the volume growth of the consumption names, even if you see the last Q1 and Q2, they have been above 6% volume growth year on year. And there are companies who have been growing almost like 10% revenue growth, 15-18% kind of an EBITDA and PAT growth, compared to single low digit kind of an EBITDA and revenue growth for the index. So these companies continues to gain market share and have been showing strength in the prices. So apart from chemical consumption, we have sectors like BFSI. So we have seen that BFSI has been under intense pressure for some time now. But there have been a handful of NBFC name, handful of good private banks which has survived this crisis of the last 2 years in spite of the liquidity issues, in spite of that strong NPA recognition impact on their ROEs. There are a couple of banks and good mid-sized private banks, good NBFCs, which has been able to show growth in their AUMs, have been able to maintain good operational parameters, and market have given them a good thumbs up for their kind of performance, and stock prices has performed. So this has been the sector which has massively helped our good and clean fund and the performance that has been into.
Okay. In your portfolios, are you going pro-cyclical as well? And if so, what within that cyclical space are you looking to add on to positions in a meaningful way, not just about 0.5%, 1% exposure just to test water, somewhere where you're convinced about the uptick coming sooner rather than later?
Agree, completely agree with that. Normally this fund is a focused fund, and we normally try to stay away from cyclical stories. industrial story, high debt, metal names kind of a play. But at the same time, we believe auto is one of the cyclical sector which is very, very exciting. So recently we have added a sizable chunk to auto space because this is a pessimist time frame where you get this kind of valuations. We continue to believe that in India auto will continue to grow, and there will be like a handful of companies only which will get this kind of growth going ahead. We understand that there is a lot of issues on the growth side on the auto in the near term, and at the same time BX6 is around the corner. But we believe these are the time to actually build stock in the portfolio, and whenever the things improve, probably 2, 3, 4 quarters down the line, the point is we want to expect healthy return to accrue to the portfolio on the basis of auto exposure over the next 3 to 5 years. So we believe this is actually good time to get into cyclical like auto in our portfolio, and we have been doing that recently. Apart from that, we don't invest into industrials and metals as I highlighted to you, because when you talk about good and clean, a lot of companies will not clear those filters of strong ROE, strong balance sheets and all that. So auto is the only sector which is kind of cyclical we play in the portfolio.
Okay. Just one last question on some of these housing finance companies, Aishwarya, and when we're taking a look at NBFCs as a whole, where does this fit in?
So we continue to like this space. We understand that there is an inherent a risk of sentiment which has been building up around the housing finance sector and even NBFC per se over the last 1 year. But we believe that there are a couple of good players who continue to work in a very conservative fashion, where the growth is backed by a very strong liability franchise, where we believe that the pedigree of the managements are strong. So there are a couple of good investments that we have done in the last 1 year in the housing finance space and on auto NBFC kind of space, and we believe India cannot be a 5 trillion economy without being strong support from the BFSI and HFC and NBFC as a sector. So we continues to remain very upbeat on this space, and we believe this is actually an opportunity to find those kind of names which can meaningfully add on those AUM growth, and where the asset quality parameters and assessment are quite stringent, and where they understand the conservativeness of the society, of the business model. So we like this sector, and we have sizable investment into the leaders of auto NBFC housing finance names in our portfolio. We continue to like them.
Okay, we'll leave it at that, Aishwarya. Thanks very much for joining us this afternoon. And since we're talking of cyclicals, steel makers, though have not had the best day today, have been doing well in the recent past. But this is not just sentiment driven. It seems fundamentals too are turning favorable, both domestically and globally. Nikki Mirchandani tells us what exactly has changed in their favor. Nikki.
Well, thanks, Abhinav, for that. Tide seems to be clearly turning in the favor of steel industry right now. A key parameter to judge whether or not the stock price could move forward would be capacity utilization. That trend has been picking up for the industry as a whole. If you look at the period from 2016 to 2019, we've already seen utilization levels picking up from 69 to 83 odd percent, and that trend is only expected to move further towards the northwards between 83% to 91%. That's the kind of utilization that you can expect in the next 4 years. This utilization is driven by two essential things, that is a combination of demand revival prospects and the limited capacity addition. If we talk about the demand revival, where V.R. Sharma, MD of JSPL, he said that he first expects demand to come in from the construction sector, where activity more or less has been subdued over the last 4 years, but then with the government setting up funds for reviving the stalled projects and the affordable housing segment focus is clearly expected to revive the construction sector and get some momentum going out there. We're also expecting some amount of revival coming in from auto sector as a whole, given that we have some amount of clarity on e-vehicles and BS6 emission norms right now. Since that is out of the way, we can expect some purchases to come in place. Let's look at the limited capacity addition. We're looking at a capacity addition of around 15 to 18 MTPA over the span of next 3 years for that matter. It's also in this period when demand is expected to outdo the supply. Demand is expected to grow around 3.5 to 5.5%, 4 to 6% kind of range, and supply on the other hand is expected to be a tad muted as compared to that of your supply scenario. If you look at the capacity addition, you're looking at JSW Steel, which is expected to add 6 MTPA capacity. Next in the list we have Tata Steel, which is expected to add around 5 MTPA of capacity, and also we're looking at NMDC capacity coming in on floor by FY23. Essentially, much of the rally that you've seen over the last 1 month, for that matter, in the steel stocks is also got to do with the fact how domestic HRC prices have been moving upward. If you look at the trend that we have seen, we've seen 1,000 rupees uptake already from October to November, and further going forward, we are also expecting a hike coming in to an extent of 500 to 1,000 rupees per ton, which is not surprising at all, because this is more or less a move which is in tandem with the global trend where winter curbs are being implemented in China, and on account of that, you're seeing China rebar prices also moving pretty much in favor. Having said, that's pretty much counting for the rally and a bit of fundamentals of how things are shaping up now for steel industry as a whole.
Right, Nikki, thanks very much for that. So, some light at the end of the tunnel for some of these steel manufacturers. Let's get in a more broader perspective on this with Amit Dikshit, research analyst at Edelweiss, who tracks the metal space very closely. Amit, thanks very much for taking out the time. Like we've said, while today may not be the day, but the last month or so, things have been starting to change on ground for some of these metal players in terms of, things turning favorable, pricing coming back into action, capacity additions back on track. What's your sense?
No, yeah. So last 1 month has been pretty good for all the steel stocks, if you see. And it is coming on the back of the fact that after 21 successive weeks of steel price decline, we finally saw the uptick in steel prices. For last 4 weeks, flat steel prices have been increasing. And now, encouraged by the success of price increases, so as to say in November, the various large producers are contemplating another hike in December. So on the whole, price hikes have been there. The domestic price levels that had fallen below anti-dumping duty levels are now reverting. However, the key success or the key factor for sustainability of the same remains the demand on the ground. That, unfortunately, still remains something that is slightly hazy at the moment. If you look at the demand growth in October, that was 3.2% YOY, which is lower than the overall April to October growth of 4.2%. So unless and until demand picks up, well, I don't rule out the possibility of steel prices flattening out in the near term.
Okay, how much importance are you giving to what happens to China as well? Because that's one of the biggest, production hubs for steel, and obviously what comes out of China pretty much dictates the terms of what the rest of the world does. So in terms of pricing, demand, production, where does China fit in terms of a forward-looking outlook?
Well, China, if you look at it, China has surprised everyone on positive side. So in World Steel Association actually publishes a semi-annual consumption forecast. So had you seen the forecast in 2018 beginning, where they forecasted for 2019. So 2019 steel consumption in China was supposed to decline by 3%. And the latest forecast in October suggests that 2019 consumption actually will grow by 3%. So this is a 6% swing, which is quite significant considering the size of China. So at the moment, China is producing copious amount of steel. However, for the comfort of everyone, it is also consuming. So the thing that we like to track in China are essentially the exports, the quantum of exports, and of course the export price. So both of these things have remained within control at the moment. Going forward in near term, what you would see that this is the seasonally weak period in China, when the activity both on steel side as well as on the end user side actually slows down. So, but given the fact that the winters have already started, while winter cuts have started already, but it remains to be seen how effective they are. Last year, for instance, they were not effective. So a lot depends on how effective these winter cuts are to sustain the Chinese prices. So a lot remains to be seen as far as China is concerned, to be honest, at the moment.
Okay. In terms of how you read into the listed space, where do you feel there's most value in terms of owning any of these stocks?
Okay. So see, we believe that at the current juncture, while stocks have given very good returns over last 1 month, I believe JSPL stands ahead of the pack, mainly because it is focused on longs. It is the only company to increase its volume this year. The third reason is that it doesn't have auto exposure. The fourth reason is, of course, that certain products that it offers, like rails, specialty plates, they are relatively price inelastic. So all in all, you will find JSPL faring better. And there are some other sweeteners, such as they getting that 315 megawatt PPA, and the starting Gare Palma mine, which will reduce cost, and any favorable decision with respect to that Sada iron ore finds. That should help these stocks. So JSPL essentially stands at a very sweet spot. The other two biggies, JSW Steel and Tata Steel, both of them, as I said, that the uptick in auto demand is very critical for both these stocks, given the fact that their capex cycle has still not ended. So clearly, I would prefer JSPL in the whole steel pack at the moment.
Okay, so that's what Amit Dixit likes, JSPL. Amit, we leave it at that. Thank you very much for joining us this afternoon.
Thank you.
Moving away from that, investors are ignoring the value that is emerging in select small and mid-cap stocks. That's the word from Ramesh Damani on our special series, Bulls Interrupted. He also spoke about how avoiding broader market stocks is a shorthand for investors for not doing their homework. Listen in.
This is particularly, I mean, after 30 years in the market, you expect to be better prepared for something like this, and I wasn't. One of the few times you get caught with your pants down, and it was disturbing. Am I getting old? Am I losing my reflexes? You go through all these things out there. The good news is that at the end of the day, great businesses will find a way to come back. Cream will rise to the top. So I'm not concerned about that. But in between, we had to go through a huge amount of a pain in the stocks we selected. Give you examples of companies that in the last 18 months have paid dividends of 50 rupees, 25 rupees, 12.5 rupees on a 500 rupees stock. So paid 80 rupees dividend, the stock's at 400 right now. So the market is not respecting almost anything other than the highest corporate governance. The truth though, Neeraj, as you say about capitalism, is that there is always summer coming. No matter how deep the winter is, the system won't work, capitalism won't work. Right. At some point, prices get discounted and the smart money scoops in and finds the bargains. And that the low base effect then kicks in, and again, you start getting rewarded for the things you make. And as you often read in newspaper headlines, that the time to buy is when there's maximum pessimism on the street. And I'll give you a case study for that. There couldn't be any worse headlines in the news press than what happened to our telecom companies. They were all destroyed over the last few weeks because of the headlines of adjusted gross revenues, the enormous amount of tax liabilities. And yet these stocks are up 20-30% in the next few weeks following that. So maybe we've reached the point of maximum pessimism, and maybe investors who made an error of optimism earlier are now making an error of pessimism, and the error of optimism maybe with the high quadrant, high value stocks, and there's the error of pessimism with the small cap, mid cap stocks. And if there's one iron rule of finance that I've learned, is that you always regress to the mean. So I think both won't hold. I think the high quality stocks will suffer periods of slowdown, and the low quality stocks which will survive will prosper over the next few years.
Yeah. So I would want your wisdom out here, Ramesh, because you would have seen some of these periods. A lot of people who talk to us say that the difference between some of the past few times and this time around for those high quality names is that some of them are still displaying potential growth rates which could be northwards of 20%, 25% earnings for the next few quarters, arguably years, and therefore there the multiples will not come down, so this time is slightly different. And then there is other set of arguments to say, okay, look at Infosys in 2000, all of it was the same thing. So markets don't work only on 10, 15 stocks. You need the larger thing to participate. How would you, or what would your advice be on this argument?
No company is an island to itself. I mean,
Okay.
the broad economy has to do well. I think because of a lot of companies going to zero, investors panicked and said, I want my money back. I'm going to go into companies that will make money, and they ignored the P ratio. But at the end of the day, history teaches us that very, very few businesses, maybe one in a generation or 1 in 5 in a generation that come along, that can afford a multiple of 100 or 80, businesses that grow at 20% should not be valued at 8 times earnings, okay? But in a bubble, anything can happen. But there's an old lesson I learned of a bubble, that every bubble is accompanied by a pin. And when the two meet, the investors are going to learn a lot of old lessons. The new investors are going to learn a lot of old lessons. But leave that aside. I think given the fact that the bull market is intact, we have now carried 20%, so theoretically we are intact. It didn't feel like that, but theoretically intact. I think there are some bargains to be had in this section. The market is ignoring the small caps and the mid cap stocks. If you believe, as some of my wiser friends tell me, that these companies will survive in the next 5 years, 10 years, that's where you want to put these money, because these companies have survived, they have good track records, and they're throwing them away. The investors are throwing them away. The era of pessimism is there in the market. And typically to get superior returns, you need to buy at a good price, at attractive valuation. And I would proposition to you that the higher quadrant companies are great companies, but the valuations reflect that. Whereas the mid-cap and small-cap companies, some are good companies at absolutely pathetic valuations. So the next opportunity, the next swing will have to be in those kind of stocks. And for all those people who come out routinely and say, oh, we should never invest in small cap, never invest in mid cap stocks, it's just a shorthand for not doing your own homework. I think there are great companies available that should be picked and looked at. And if you're right, you'll be handsomely rewarded in them.
And of course, you can see this interview in detail on our website, BloombergQuint.com. Do log on and try and read more about this story, as well as this series, Bulls Interrupted. We played out 3 interviews for the series, which is Ramdev, Naren, and Ramesh Damani. Do try and log in and hear all of those. But now for the markets and what to do in the last 1 hour of trade, our experts join in to talk about that as we trade at the lowest point of the day. Kshitij Gandhi of SMC Global Securities with us, as is Amar Singh of Angel Broking. Gentlemen, both of you, good afternoon. Thanks for joining in. Kshitij, how are you approaching trade this afternoon? We are 1% lower. Is this a level of support in and around here from where we could bounce back, and are you playing for that, or are you short?
Definitely, after testing its record highs in November series, today Nifty and Bank Nifty both the indexes are facing kind of a profit booking at a higher levels as the weekend has also approached, and traders are definitely locking profits at the higher levels. But yes, once again, the broader trend is still bullish as of now, and as far we are holding above 11,900, 11,950 levels, I believe once again the bulls will make a comeback in next week. So as far the levels are concerned, I believe 12,000 to 11,950, these are the very, very strong support levels for the Nifty moving forward. And for the Bank Nifty as well, I believe 31,650 to 31,500 levels. These are once again very good support levels. So anytime we are getting dip into the prices, this is a good opportunity to once again go long in both the indices. And I believe for a coming week, we might witness some kind of a stock specific action rather than any sharp move in an index. So we have some long ideas for today's session.
Okay. And we'll come to those long ideas in a bit, Kshitij, but I also want to get in Amar Singh and ask him his strategy on the index. Amar, would you also be a believer that every dip should be bought into?
Yeah, I would say there is no reason not to believe that in spite of the market correcting by 100 points today, because what we see on the weekly charts, the monthly charts and the daily charts clearly show that there is still bullish momentum and the trend is up. So effectively meaning is that correction should be bought into till the time we don't see the index from a short-term perspective closing below 11,800, 850 mark, because that could mean that a crucial support zone has been broken. Yes, on the upside, Because looking at the daily charts, we are seeing some bearish divergence on the daily charts in Nifty, not in Bank Nifty though. But we've been seeing that in Nifty for quite some time, but the bullish momentum has still managed to stay put. So what I would suggest is that on the upside, yes, you need to be slightly cautious, but the trend still is up. For Nifty futures, the resistance around 12,150 odd levels, that is going to act as a short-term resistance level, because higher levels will find it difficult to sustain, but the trend still remaining up. Looking at Bank Nifty technically is still stronger as compared to Nifty, even on the daily charts, because we are not seeing that sort of bearish divergence on Bank Nifty which we are witnessing on Nifty. So for Bank Nifty, I would say first support comes around 31,700, 750 levels on the futures side, whereas on the resistance, it's around 32,150, 200. That's a crucial zone of resistance. Buying on dips is what is still recommended till we don't see a change in trend.
So both are experts looking at going long or buying on dips, or maybe even at certain cases at current levels. Should it?
Bank Nifty is recovering quite a bit.
A little bit, yeah. Quite a bit, 176 points. Can we look at the intraday? It's down about 0.54%. So yeah, a bit of a pullback in the last 2 minutes of trade for sure. I mean, that's leading the other two indices as well, slightly higher, though the Bank Nifty has a more pronounced gain right now. Actually, Amar, you want to first come in on the Nifty Bank very, very quickly before we get to specific ideas?
Yeah, I would say that Nifty Bank definitely, as I said, it has found strong support, and there is a possibility that it could rally towards its recent highs. But as I said, 32,140, 150 would act as a level of resistance. Today's low is important. If that is breached, then we could see some further correction towards 31,500 odd levels.
Okay. What about specific stocks? Kshitij, you mentioned that you got some longs for today. What are those?
Right. For today's session, I have got 3 buy ideas. As I have mentioned, we might witness, some kind of a stock-specific moves in coming week. So first idea would be from a tea and coffee space, and the stock is Tata Global. The stock is already trading at its 52-week high, and from the technical parameters as well, the stock has given a sharp breakout above the key resistance level, which was placed around 320 levels. And the secondary oscillators are also pointing towards the more upside into the prices. So I believe yes, the stock has still a lot of potential to move towards say 340 levels on positional basis. So one can take a long position at current levels as well. Keep a stop loss below 307 levels from here on for upside potential of say 340 levels. The second long position I would like to take from the entertainment space, and stock is PVR. If I look at basically the derivative data, the stock has already added up a hefty open interest of more than 15% with a rise in price of say more than 1%. And on technical parameters as well, the stock is continuously holding up above its short and long term moving averages. So I believe the stock has a potential to move towards 1875, 1880 levels from here on. You need to keep a stop loss below 1745 levels and take a long position. The last stock I would like to take as a long position is from the cement counter. We have been seeing, some kind of a buying momentum coming into the cement sector in yesterday's session, and I believe the momentum will keep going in coming sessions as well. So one stock I would like to take a long position is Ambuja Cement. Currently, stock is trading around 205 levels, and I believe stock has a potential to move towards 216 levels from here on. You need to keep a stop loss below 200 levels for any long trade.
Okay, Amar Singh, what about your individual stocks?
Yeah, I would say the first stock to look at is Bharti Airtel. What we are seeing here is that Bharti Airtel continues to be extremely strong on various time frames. And even on the daily chart, we've seen some consolidation, some pause, but the trend, even on the short term, on the daily charts, continues to be extremely strong and firm. So this is one stock one can look at from a buying perspective. So any dip towards 435, 440 levels can be used as a buying opportunity with a stop loss of 423 and a target of 465 in the short term. And the second stock to look again is from the buy, that is Tata Chemicals. What we are seeing in Tata Chemicals is that this is one stock which is continuing to display bullish momentum on the daily, on the daily charts, and it has breached a crucial resistance zone of around 650, 660 zone, currently trading around 678 odd levels. And on the daily charts also, the bullish momentum seems to be building up, and what we've seen is that it has breached a I would say bearish pattern which was formed on the weekly charts at doji. So that clearly reflects that there is bullish momentum in this stock. One can look at Tata Chemicals. Any pullback towards 665, 670 odd levels can be used to initiate a long position with a stop loss of 643 and a target of 714 in the short term.
Okay, got that. Bharti Infratel, that is now up 8.5%, and we highlighted that at the start of the show as to the intraday volatility itself is playing out on the stock, 278. Amar, do you track Bharti Infratel?
Yeah, we do. So what we see here in Bharti Infratel is that this stock has corrected recently from almost 260 odd levels to 220, 23. But again, for the last 2 days, the stock has managed to bounce back. Technically, if you look at it on the weekly charts, it continues to be positive. So this week is going to, one of the major indicators is indicating positive momentum. Daily charts it's already been, but on the upside, it could meet, if you look at it technically, so it could meet with some resistance around 285, 290 zone. So ideally, that could be a level where one can look at booking profits, because till the time we don't see it sustaining above 285, 290 zone, roughly you can say 280, 300 zone, that should act as a crucial level of resistance. So ideally, it could be a level to book profits in Bharti Infratel.
Okay, book profits according to Amar Singh. Gurmeet Chadha of Complete Circle Consultants also joins us on the show. Gurmeet, good afternoon to you. What's your call? I mean, obviously, markets are a bit subdued ahead of those GDP numbers, but do you feel that this is just a very minor setback in the larger scheme of things?
I think so, Devina. I think, any dips, are welcome. I think the momentum remains very, very strong. We speak to a lot of family offices and clients, and, a lot of them are sitting on cash and waiting for dips to deploy money. So, and I think this is more a case of, a hope rally where probably you will see few more reforms coming in. So there is clear divergence in terms of what the economic activity is indicating. I think we'll have the Q2 GDP print also by evening today, which probably could be sub 4-5%, and which could force another 2-3 steps, which the markets are anticipating. And I think markets typically tend to, and we have discussed this, discount things 6-9 months in advance. So there is an expectation of a stressed asset fund. We have been discussing that for a while now. There could be some tinkering with maybe dividend distribution tax, with FM calling it a regressive tax on the floor of the parliament. So a lot of things there. Plus, I think the global liquidity, which we keep discussing, continues to be, has a positive momentum. I think if China can reflate a bit, I think that would be even helpful. But as I keep saying, you should see asset class cycles. I still find debt attractive. I've been saying this since the beginning of the year. If you see the shorter end of the yield curve has delivered, a fantastic 12-13% return. So debt funds with 1-2 year maturities have delivered well. And that creates an opportunity now at the medium and longer end. Your 2-year AAA is at 650, and your 10-year AAA is at about 760, 770. So this kind of a term spread is not sustainable. So as transmission happens, as the stress on fiscal worries ease, I think even debt is a good opportunity at the medium to longer end of the curve. So a balanced allocation is what I think.
Okay, so look at the balanced allocation, not necessarily full blown, and even, by the way, not just from a mutual fund perspective, but even otherwise. You could look at some other options as well, which could be doing well. Speaking of transmission, just a loose correlation out here, but the name of the stock which is doing very well is Adani Transmission, Devina.
That is indeed a loose correlation.
A very loose correlation, but look at that move, 313 up 11.5% today, and it's stayed rock steady. Talking about how every single week there is one Adani Group stock which takes the lead and becomes the hero of the week of sorts. Adani Green had been for such a long time. We've seen Adani Gas after that agreement with Total doing well, and now Adani Transmission at 313 is trading. I think Adani Transmission should be trading at fresh life highs. This is Adani Gas, the deal with Total, and then the stock has done, and this is Adani.
So they're all at their 3-month highs, I guess.
Yeah, and I think these are life highs for each of these. I don't think there is any deviation then. So almost all of those stocks, but for Adani Power and maybe Adani Port might be trading at life highs for themselves. So Gurmeet, difficult space, but difficult companies to track. Not too many coverage out here. We attempted a piece on Adani Green a couple of days back, wherein Sharan had spoken about why is it that the stock could be doing what it is doing. But I want to talk to you about Adani Transmission. Do you like the business and do you like the valuations from a stock perspective?
So Neeraj, I do not track Adani stocks as closely as you. I did cover your, follow your story on Adani Green. I think, but the port business looks to be the best placed, in amongst the entire thing. And I think you see this kind of flavor in one group stocks, quite often in the market. So we've seen that with, the Bajaj group. We've seen that with the HDFC group. It happens, I think, when that's how market is now probably operating. But one has to be careful in getting into these momentum plays, is my view. But I honestly, I've not tracked transmission to that extent. It's just superficially done based on the numbers I keep, on a here and say basis.
Yeah, it's just been crazy for these names and the kind of gains that they've had. Adani Ports too, by the way, 382 is doing reasonably okay for itself. Just that YTD, Adani Port is still down about 1%. So it's not gained too much for the year at large. It's still trending flat this year, about 1.34%. But is doing well over the last 7 days. It's gained about 5% with 2.5% gains in today's session. Bharti Airtel is the big chunk, and Gurmeet, I wanted to talk to you about this. The four plays, and if there are some ancillaries that you believe could gain as well. But if and when we see the price hike, with an assumption that the price hike happens this weekend, which stock do you think tends to gain the most? Would it be Airtel? Would it be Infratel? Would it be Vodafone Idea? Or could it even be Reliance Industries?
Yes, I think Reliance Industry, I think, obviously, I think that momentum has taken it to 10 lakh crores. I would be a little careful in terms of adding more to these levels because, all its businesses need, big capex. And right now, the plans to, cut debt and deleverage are more announcements than actual money flowing in. So I don't see, and if it goes further upside, then I probably, would not mind taking some chips off the table. Right now, it would be neutral. I think Bharti is the best place, and one has to take a little more medium-term view, in terms of, in this particular sector. So I think the tariff hikes could be anywhere between 10 to 20%. Within that, if you see, you'll have probably the hikes in the rural and tier 2, tier 3 circles would be much lower than the urban circles. Also, Bharti has defended its market share, remarkably in face of what has happened. While some of it is also consciously losing down the lower ARPU band of customers, but overall, I think it's defended well. And as I keep saying, this space will evolve into a much bigger play of content, commerce, and communication. So I think so you need a big war chest to stay alive and sustain for a longer period of time. So I think eventually it will be Airtel and Jio. I think that's what it looks to me, and so I would play Airtel now. Once Jio maybe is spins off or listed separately, I think that's when probably would like to take a call on Jio separately, not Reliance as such on a consolidated basis right now.
Okay. Remember, we're going to wait and watch to see if there are any meaningful developments over the weekend with regards to those tariff hikes that everyone's been talking about. But in anticipation of that, you've seen many of these, all of these stocks running up. So Bharti Airtel, while it's held its ground, Bharti Infratel has been moving up gradually. It's 8% right now for Bharti Infratel. What's also done okay for itself, come off lows which it had made. It had gone sub its IPO price. It was Coal India. Now Coal India trades at about 206. Amar, any trade available on Coal India?
Yeah, Coal India seems to be inching upwards after the sharp correction which the stock has witnessed. And what we see here on the weekly charts is that there is some sort of bullish divergence. But again, it has got very strong resistance zone somewhere around 215, 220. So even if the upside, there is some upside, it could move towards 215, 220 odd levels, where it could meet with selling pressure. Because if you look at the long-term charts, be it the monthly or the quarterly charts, they still continue to be in a downtrend. So effectively meaning is that higher levels towards 250, 220 ideally could be used as a shorting opportunity or for covering the longs, those who've gone long around about 200 odd levels.
Okay, that's Coal India for you. The other one is Z. 303 now on the stock. Kshitij, would you trade here on the short side?
See, if I look at the chart structure, it clearly doesn't clearly shows any kind of a breakdown as of now, because I believe 290 to 295 zone would act as a crucial support for the ZEAL. So as far we don't breach decisively below 297s, it won't be a wise idea to take a short positions. But yes, I believe the consolidation phase will likely to continue in ZEAL in the broader range of say 290 on a downside and 320 on a higher side. So as far we are trading in this zone, it will not be a particular wise idea to take any kind of a trade in Z particularly.
Okay, that's Z for you. The stock's at 303, and it's not had a very great week. So stock even after the overhang out of the way, the slew of resignations have really raised question marks, and the stock's been down 15% for this week. Away from Z then, auto sales lose momentum after the slight pickup in demand witnessed in the festive season. A BloombergQuint survey of 9 automobile dealers across the country shows sales declining for most cars and bike makers. Yash Upadhyay is standing by with the findings. Yash, let's talk about this. Obviously now, the festive season last year was in the month of November, so that comes in with a high base effect nonetheless. But how is it going to be in terms of this month?
Well, it is expected to be a weak month for auto sales, and like you rightly mentioned, it is down to the fact that both Dhanteras as well as Diwali were in the November of last year, and because we had all of the festive sales getting clubbed into the month of October, November is likely to be weak on account of that seasonal impact. And not just on a year-on-year basis, there is moderation with respect to demand coming in over the previous month as well, in terms of both the walk-ins as well as inquiries, with dealers falling by as much as 40 to 50% over the previous month. But there has been some comfort. The only positive over here, or the only silver lining, has been that there has been some cushion to the overall volumes coming in on the back of the marriage season, and this has been majorly seen in the two-wheeler space, but passenger vehicle space continues to remain slower on a month-on-month as well as on a YOY basis. Now coming to the individual names, and I'll start first with Maruti Suzuki. Well, there the sales are likely to drop by about 10% on a year-on-year basis. The figures could be anywhere between 135 to 140,000 units in the month of November. Next in the line is M&M. Again, they haven't had a whole host of new launches over the last few months, and because of that aging lineup as well, we are likely to see about a 6.5 to 7% drop for the company. Tata Motors, do keep in mind that they have an extremely high share of commercial vehicle space to their overall portfolio, is the reason why we are likely to see this big 30% plus kind of drop on a year-on-year basis, and we are still seeing a significant amount of weakness on the commercial vehicle space. There is weakness in the passenger vehicle car space as well for the company. But that's as far as the four-wheelers are concerned. Moving on to the two-wheelers, Hero MotoCorp, we are likely to see about a 10 to 12% drop in sales again for the company, expected to be around 540,000 units. They had been consistently doing over 6 lakh units for a couple of months before that as well. So that is one name to watch out for. That apart, again, TVS Motors, it's expected to be a weak month, 10 to 12% kind of drop for the company as well. Bajaj Auto, it has been one of the outliers because the volumes have been supported by the higher share of exports. Exports account for nearly 45% of the overall volumes, and that is likely to be in and around the mark of 395 to 4 lakh units, something similar to what they had did last year as well. But the only auto company in this list which is likely to report a positive volume growth on a year-on-year basis is Eicher Motors. There were concerns with respect to worker unrest, which resulted into production loss in last year, as a result of which we saw volumes drop to as low as 65,700 units. So on that favorable base for Eicher Motors, we are likely to see higher sales coming in. But all in all, the month hasn't been as bad as was anticipated at the start of the month, but still overall there is significant amount of weakness, and as far as the outlook is concerned, there is concern as to whether or not we could see sustained momentum of this demand uptake. There's the seasonal factor with the year-end sales as well, so we'll have to wait and watch how the situation pans out.
All right, Yash, thanks very much for that. So that's for the auto sales numbers this month around. But I can't really tell who we were talking to, but the analysis of auto sales numbers on a monthly basis seems to be a little fractured in terms of getting the right gauge, because when you look at the festive season last year.
Yeah, I think Samir Narayan was saying that you should probably do it on a 3-month basis,
on a quarterly basis. That gives you a more measured and
and I think this time around maybe there will be merit in looking at October and November last year versus October and November this year, just because of the split festive season last year versus the concentrated festive season this year. But I must say, November will look slightly patchy. October showed up because of both the festivals being there at the same time out there.
Yeah, and this excitement. I mean, for a brief period, I think you did have some interest in stocks like Tata Motors, but now it's just stagnated. You've got Maruti, which is just flatlined around that 70-100 mark. It's not doing anything much over the last few trading weeks, rather. M&M also around that 530 mark, just seems to be lying low.
Yeah, they've been consolidating off late after that big uptake, and in fact Maruti's corrected a bit as well, just that Eicher Motors is kind of staying out. And I think the numbers also suggested, the dealer service suggested that maybe Eicher Motors might have an okay month. Gurmeet, is there an auto name within the list that you would think might be worth investing in should the November numbers not be that good and the stocks might just correct a little bit?
Definitely, Neeraj. I think good businesses going through challenging times is an opportunity not to be missed. I think you must add, in case you don't have exposure to auto, with a disclaimer. I think I like Bajaj Auto. I mean, if you see this year, it's actually gained 15-16%. Versus others who are, down, which includes Hero and TVS. We have discussed how, the 50% of the sales is exports and three-wheelers, which cushions it from, some kind of a slowdown. Even if you see the product mix now, it's almost 45% is premium and sports, which so with a better product mix, we also saw Q2 margins being slightly above 16%, and management expects that, their margins will sustain in this 16-17% band, which is good news. Obviously, some help has been from the benign commodity prices. If you see in the bike segment now, they are now almost 25%. So clearly, they've gained market share. In the cargo segment, they have now gone up to 31. However, the cargo segment overall is only 17-18% of the industry. There is cash in the balance sheet, so that remains the pick. So when things turn, I think Bajaj Auto will continue to do well. We've discussed, Minda, how I like the content themes. I think gradually, once the cycle turns, people with more content per vehicle would clearly gain. And I think that's why if you see on Minda, for example, the prices are from 260 to 70. We are already at 340 to 340, 350. Ashok Leyland, I think, is a great franchise to buy. It's that the entire segment is going through some tough times. But you have to buy good businesses at these prices, because when the tide will turn, you will not get the price. The prices will be very, very sharp. So if you can take maybe another 1 or 2 quarters of pain, and we've seen how markets can discount things quickly. If there is, let's say, a motor scrappage policy, some uptick in economic activity, I think you will see that. So 3 names: Bajaj, Minda, and Ashok Leyland for me in the auto space.
Okay. Anything within the NBFC space, Gurmeet?
Yes, if you recollect, we've been talking about, there are going a notch up now, a notch below, let me put it this way, in terms of banking and financial services. So with banks, we are discussing how one can look at some of the better run regional banks and tier 2 banks like a Federal Bank, City Union, a DCB. We've seen now RBL announcing, probably will announce fundraise tomorrow. In NBFCs, where probably the perception risk is bigger than the actual risk, where there is good parentage, where there is, the loan book stands more diversified. We discussed L&T Finance and Chola, even Motilal Oswal. So I think the ones which are now moving from wholesale funding to more granular, models, I think gradually you will see an uptick. I think while there are already rumors of a stressed asset fund or a bad bank kind of idea being floating around, I think that would be very, very good, because what happens is that if the regulator does not do an AQR, the market does its own AQR, and when the market does the AQR, it's quite brutal. Edelweiss just closed an NCD issuance, collecting 500 crores at average 10%. I mean, your repo rate is 5.10, 5.15, and a AA rated, decent NBFC is borrowing money at 10%. I mean, there is no way, the interest rates will be transmitted. We discussed about even the term spreads being very high at the longer end of the curve. So I think this trust issue will gradually get addressed. And to an extent, it is getting addressed now. And once it fully gets addressed, there is a lot of value in some of these names which we just discussed.
And what timing to mention Edelweiss. We had a conversation with Rashesh Shah just this morning, and he spoke about all of these factors, but also mentioned that FY20 will be a zero growth year for NBFCs. It will start kicking into about 15-16% come FY21. A year into that conversation we had with them.
For FY20, I would expect NBFC growth to be close to zero as a whole. For the industry, and when I say NBFCs, I mean NBFCs and housing finance companies all put together. For FY20, we should expect the asset book of the NBFCs to be at a 0% growth, and for 2021 we would expect to get back to a 13-14% growth. As I said earlier, NBFCs were growing at about 24-25% for the last 5 years. I think FY20 will be almost a zero growth year. But then, as I said, things normalize and things will pick up, and all this co-origination and everything else is for 2021. But the foundation is being laid, and I think even a 14-15% growth for 21 should be a good beginning. And I think overall NBFCs should continue to aim for a 15 to 20% growth even after that, as things stabilize, as liquidity eases off. And more important, I think going forward, NBFCs will focus on what I think being partners to banks. I don't think the model for NBFCs will be that NBFCs will compete with banks. I think increasingly NBFCs will have to do things that banks either can't do or don't find it economical to do. So NBFCs being partners with bank via co-origination and all will be a strong way of going forward. Along with that, I think NBFCs will become slightly more asset efficient. They will not grow the balance sheet very fast. They will look to churn the balance sheet by portfolio sell downs and all, so that they don't have very high gearing. I think historically NBFCs were geared between 6 to 7 times. I do think this will come down to about 5 to 6 times going forward. So NBFCs will become asset efficient, capital efficient, will partner with bank, and obviously will use technology and all to reach out to a lot of retail and SME customers, where NBFCs have a much stronger reach.
Do you feel that the investor sentiment and the retail investor sentiment, be it HNIs, be it your smaller ticket investors, they're still more sanguine about the prospects of market returns and the fact that this market is at a record high? Do you feel that money in those businesses will continue to grow?
See, overall, I think the long-term trends in India, like whether you call it financialization of household savings, retail credit, borrowing, because household balance sheets are very ungeared. There is retail borrowing for home loans and SME businesses and all. The impact of technology in bringing down intermediation cost, all these trends remain intact. Even the fact that interest rates have been coming down. In fact, currently we are at a mortgage rate of 805, which is one of the lowest in the last 14-15 years. So we are at the lowest mortgage rates that we have seen for a long time. Inflation is under control, liquidity is surplus. All this are building and all the bad things in the growth that were to happen, auto sales coming down, liquidity crunch in the economy, all that has happened. But most investors are looking across the valley. They are looking at what can happen in the future. And I think if you look at India in the past also, there have been bad phases of growth in India, but they've always followed by growth coming back and things coming to normalcy. And normalcy for India is a reasonable amount of growth. I think we have, for the last 25 years, India has grown at between 6.5 to 7% real GDP growth rate and about 12 to 13 nominal GDP growth rate. And that kind of a growth, I think most investors believe, is coming back in India, given all the things Reserve Bank has done, government has done. So I think investors are feeling optimistic about India's coming back to normalcy. And a lot of people are saying that the last maybe year and a half has more been an aberration in the India story than the new reality. I think the reality is we'll go back to a normal growth rate of between 6.5 to 7. I think inflation, if it remains under control and with all the structural changes that have happened, there seems to be optimism. Obviously, there'll be volatility. India can be a fairly volatile country, and that is why most investors should take a long-term view, because this, if you take a 5-10 year view, then it is easier to manage the volatility. If you take a 3-quarter view, then one bad quarter of high volatility can shake you out. So I think India on a long-term basis continues to look good to investors.
All right, time now to find out what has also made it to Sharad Dubey's list of the Fab 4 stocks for the afternoon. Sharad, good afternoon.
Good afternoon, Devina. The first stock is L&T and Finance Holdings. The stock is up more than 5% after Goldman Sachs have initiated the coverage with a buy rating at the target price of almost 140 rupees. So they have stated that the company is positioned to scale up on a comfortable profitability, and also the overhang of the recent concerns have left behind, and there's a potential of market share gains. Apart from this, the brokerage also expects earnings growth to be almost 13 to 14% on a compounded basis, while the return on assets will grow at almost 2.3% for FY20 to FY22. Up next is HCC, which is up almost 4% after the company stated in its press release that post the Supreme Court's order, the company is ready to execute arbitration awards of almost 1,584 crore rupees. Up next is Future Retail, which is up 3.6% after the Competition Commission of India has given its nod for Amazon's proposal to acquire almost 49% stake in Future Coupons. So Future Coupons is the promoter entity for Future Retail. And the last stock of the day is NBCC, which is up almost 6.6% after fresh longs were seen with a high open interest rate of 11% and volumes trading at almost 2 times its 20-day average. So these 4 stocks are buzzing in the space. Back to you.
Okay, thanks a lot for that, Sharad. L&T Finance Holdings is certainly coming in the charts. Motilal Oswal is bullish, Goldman Sachs is bullish. The stock's done well in the last 3 or 4 trading sessions as well. So the going is good for now. Technically, Amar Singh, if you were long L&T Finance Holdings, would you take some money off the table or would you stay long?
Yeah, I would say that looking at L&T Finance on the charts, be the weekly or the daily charts, clearly shows that there is bullish momentum on the upside. But however, on the long-term charts, it clearly shows that this stock has got resistance coming around 128, 130 odd levels, and it has made a high of 123.5. So ideally, higher levels should be looked at booking profits, because the stock is likely to run into stiff resistance around those levels.
The other one, Devina, is Z Entertainment, and now with this crack today, it's sub the level that it was when the deal got announced. The day the deal got announced, it had gone up to 307, then the deal got announced and it went up to 340, 345, whatever it did. From there, Z has consistently gone down. That's about 16% for this week and counting. So what the 3 directors have done, and this fear of maybe some disclosures coming out, has not sat down well. We were talking this 2 days ago, that whether that would weigh in on the stock, and looks like it is.
And it's also weighing in on some of the other SL Group stocks in the same vein. Dish TV, I think, is one of the biggest losers within that pack. I think the stock right now is at 13.5. This week, 15.5% lower on Dish TV. It's down 10% in today's session as well.
Yeah. Gurmeet, is Z is lower than the price it was when they announced the deal? Is it, I mean, would you buy it, or would you say that because there are too many moving parts because of directors resigning, and maybe what if some other things come out of the closet, might as well stay away?
See, Neeraj, I think the information which is coming out is I think was there in the annual report as well as the quarterly earnings. I think it's the gravity in some of it which is now creating a bit of a issue. So if you see in terms of their trade receivables, about 7 billion is only to Dish TV and City Cable, of which 3 billion is already overdue. And then we have this, we heard appropriation of the fixed deposit which happened by a scheduled commercial bank, and they haven't done enough progress on the other side of their business, which is the Adi link, where the road assets were on block, and despite the binding agreement, it could not be sold, and some of the fund houses like Birla had to do side pocketing as well. So I think the cleanup will happen now, since institutions own the company. Oppenheimer is now almost 20%. There is government of Singapore, and if you see the holding pattern, while the pledge promoter pledge issue is largely behind, I think when you have an institutional ownership, some cleanup will happen, and some of it will get reflected in stock price. We've seen, how the markets are. I mean, any error on the governance side, and I mean, then there's no case for any valuation, whether it is PE or price book. We've seen that with so many names, right? So my view is let the cleanup happen, but if it falls, maybe goes down to those 230, 240, 250 levels, then probably that risk reward becomes very, very attractive. Right now, it's very evenly balanced. Also, I think there could be some more announcements to more and more the stress comes out of promoters in terms of the debt they have. More will be the positive impact, and the concern that the fund diversion and related party transaction and CSR laxity is not there. Kidsy is also up in the block. I think there is, the KKR backed Euro Kids is probably bidding for it. So if some more monetization can happen, and in the meanwhile you will see some cleanup, I think that's the time to get in. So maybe with a wait of 2-3 weeks. I mean, it's still operationally, it's a great asset. I keep saying that subscription revenues are good. I was seeing their, DAU numbers in September. It touched 8.9 million for Z5. And if you take a 60% conversion of DAU to MAU, it translates very good numbers. So, they have the down south, their channels have started doing well. So everything else is in place. It's just that this governance needs to be fixed and debt needs to be fixed.
Okay. Kshitij, I just want to come to you on SBI. What would you do in terms of a trade here?
See, looking at the chart structure of SBI, the stock has already taken a stunner rally, say from 300 levels to 350 levels in a one go. And at current levels, once again, the stock is witnessing a kind of a profit booking. So as a trader, the risk reward is still not favorable to me for taking any long position. I would rather wait for more dip into the prices, say towards 335 levels at least, which is a good support levels before taking any long positions. And from there on, yes, I can think to take a long positions from say 335 levels. The trading stop loss would be below 330 levels from there on, and once again in coming week we might witness once again the move towards its recent highs.
Gurmeet, your take on SBI now with the kind of a valuation ask for SBI cards?
I'm very positive on SBI, Devina. I mean, we've been discussing that one PSU bank which should be part of the portfolio should be SBI. If you see their stress book about, and I'll start, whenever we discuss banks, I think we should start with the liability side and in terms of the NPA side on the asset book. If you see the PCR, it's one of the highest. Almost 59,000 crores of corporate loan are fully provided for. There is 100% coverage. If you look at sub-segment wise, traditional sectors which are causes of stress, if you see, textiles, power, infra is 88% PCR for them. Textile, telecom, power is 90% plus. Telecom is 92% plus in terms of PCR. If you see the BB rated and below book now, that's less than 3.5%. So there is steady progress there. And I'm a great believer post this SR deal and the proactiveness in which now even RBI is engaging on the NBFC front in terms of amendments to IBC. You will see more and more reversals, more and more write backs coming in, and I think they are also moving very well on the granular side. You pointed out on the cards piece. Also, I think on a retail loan portfolio they're doing very well. So I think it's if they can maybe demonstrate another quarter or two of asset quality being stable, I think the stock will get re-rated. And despite this current run up, it's still one of the cheapest stocks in terms of. And I made this point: the top 4 or 5 will become very strong now. I mean, the space has been vacated by so many that the top 4 or 5 guys will become extremely strong and continue to gain market share.
All right, and then I think that's what Credit Suisse also believes, that SBI has the legs to go up till about 417, which is their target price on the counter. Stock's at 341 right now. Let's also talk about, whether or not you'd want to go into a counter like JSPL now that we've seen things improving on ground fundamentally for the metals pack, keeping in mind the last 1 month where there have been price upticks. Commentary coming in has not been all that bad. There is a possibility of a demand uptick with rise in infrastructure and construction activities. What would you do here, Gurmeet?
See, I mean, metals, both ferrous, non-ferrous, are not part of my fundamental portfolio. I mean, you can have tactical opportunities. So I think the short-term momentum might continue to be positive. We've seen the price hikes, which will trigger in. I think if you even add the price hike and if you take the landed cost of the imported steel, we still have some margin for more hikes going forward. So this will be something like cement, with probably flatter volumes or but better realizations. And despite the run up, the valuations remain not very challenging. Also, I think the global liquidity remains. There's a risk on happening right now, which is obviously very good for commodities. So short term positive, but not something I would have a fundamental view on and add to my portfolio on a long term basis.
Okay, got that. Well, it's also time now to take a look at what dealing rooms are recommending. Yatin Mota, he's here with his channel checks. Yatin, good afternoon.
Good afternoon, Devina. And Yes Bank is one stock which will remain under focus. Probably post the market hours, there will be announcement regarding the fundraising plan. The market buzz is that the fundraising will happen via issue of preference shares. And remember, preference shares carry a fixed coupon to it, and hence cost versus a regular equity share. So probably that is the reason why the stock is under pressure. Let's see what the management really has to say on this moving ahead. As far as Ujjivan Financial is concerned, we have been in the start of the week talking about this as to how really HNIs are really interested in the counter from the trading perspective. Their small bank finance IPO is around the corner, and ahead of that, a lot of buying seen as far as Ujjivan is concerned, 337 for that one. And finally, in the cash market, do watch out for Adani Ports. Dealers recommend a buy today, sell tomorrow kind of a strategy. Remember, today there were almost 2.5 crore shares which traded in small bunch trades, and dealers do indicate that there was one large FII which has completely exited the counter, and hence there could be bounce back even from the current level. So Adani Ports is one stock which is on the dealing room radar.
Right. Yatin, thanks very much for that. So those are some stocks that you need to keep in mind as we step into the weekend. Talking about a few of these names then, Reliance Industries at 1550 now after crossing over that 10 lakh crore mark has come down once again. Nestle has practically done nothing since its entry. L&T has taken a little bit of a drag on the back of the possibility of missing those big ticket orders and a consistent decrease in the guidance that they've been putting out with regards to their order book. Stocks down 1.5%. Amar Singh, L&T for you and Reliance Industries.
I would say looking at Reliance Industries, I would say the trend still remains positive even from a short-term perspective. Yes, we've seen some mild correction today, but overall the trend still remains up. However, on the hourly charts, we are seeing some, I would say, negative divergence. So effectively, meaning is that Reliance has some crucial support coming around 1530 odd levels. If that is taken out, then it could correct all the way towards 1490. 1500 odd levels. And talking about the other stock which you mentioned, L&T, if we look at L&T, what we see here is that L&T has been comparatively, it has been weak. And what we see here is that this stock has been witnessing selling pressure. Currently, the futures is trading somewhere around 1335 odd levels, and it has been weak on various time frames, be it the long term or the intermediate or the short term. That's the reason we are seeing this sell-off happening in L&T, and somewhere below towards 1300 odd levels. That's a crucial zone of support for the stock.
Okay, so that's on these stocks. By the way, Z is cracking even more. So now that stock is trading at the lowest point of the day, about 5.7% lower. Yes Bank is trading at the lowest point of the day. There is weakness in both HUL and State Bank of India. And Reliance Industries, after nudging that 10 lakh crore mark at 1582, is trading at 1548. We haven't spoken about Reliance today. Let's talk about closing strategies first, and then we'll talk about Reliance fundamental. I mean, I know Gurmeet said that Reliance is the best bet fundamentally. I would want to see if there is a trade out there as well from both our experts once again as we close trade. But first, the closing strategy. Kshitij, to you first.
See, as a closing strategy, I would still be comfortable taking a long positions from here on. And the stock I have identified is Godrej Consumer Products. The stock is currently trading around 725 odd levels. I believe the technical structure has made up a kind of a rounding bottom at these current levels. And the stock on a daily and weekly charts as well, the stock is currently maintaining above its short and long-term moving averages. And the kind of a buying momentum we have seen in last half an hour of a trade in this stock, I believe one can take an as a BTST trade for a Monday session. So you need to keep a stop loss below 715 levels from here on, and I can see the upside potential towards 735 to 740 levels in Godrej Consumer.
Okay, Godrej Consumer it is. Amar, you gave a view on Reliance and L&T. What's your top closing strategy?
I would say one can look at Container Corporation of India. This is one stock which has been consolidating for the last couple of days, and it continues to be strong on various time frames, be it the weekly or the monthly charts. Daily, we've seen it move into oversold territory around crucial support zone. Today has been a sharp up move for the stock, almost 5%. So this is one stock one can definitely look at because the breakout is there. So ideally, any pullback can be used as a buying opportunity. The stop loss needs to be below 550 for a target of 620 on the upside.
Okay. So that's a couple of stocks. By the way, a few stocks that are inching up in the last few minutes of trade include a Symphony. We just spoke to the management yesterday, and I think there's some uptake. It's broken into the green after being in the red. But the principal mover is VA Tech Vabag, stock which has really been badgered and fundamentally is lagged in performance in a big way. Is just spiking up in the last few minutes of trade. If you just look at what VA Tech Vabag has done over the last 1 year, I think really poor performance. Fundamentally and on the stock price front as well, about 32% correction in that one. But in right now, in today's session, it's just starting to inch up a bit. So do watch out for this stock as well. Gurmeet, the other one, and just wondering if you believe this is worth investing in, Info Edge. Currently about 1.5% higher, but that notwithstanding, valuation still steady. It's not dipped too much. Would you invest in Info Edge?
So, Neeraj, personal disclaimer, yes, I've been invested in it, but haven't really advised clients on that particular account. I think there are two plays here. One is obviously is the manpower play. The other is the investments it has in some of these startups. It's a combination of that. So mine is more a hope trade in terms of significant value unlocking, which will happen, on the startup side, and even on the other vertical, which is the core vertical, I think India has a long way to go. So positive on that particular stock, but incrementally in terms of advising clients to add, we haven't given any such call. I mean, personally, I'm invested in it for almost now 3-4 years.
Okay. Gurmeet, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time this afternoon. So that's a view from Gurmeet Chadda. Z is at 292. Amar, did we talk about this technically? If not, what are the levels that this slide today opens up?
Yeah, I would say that looking at Z, the way it has corrected from its recent highs of 360 odd levels. So it does have some strong support coming around 275 to 80 odd levels, because the recent low on 15th November, that was somewhere around 278. So I would say that is a crucial zone of support. If that is taken out, then we could see some real sharp crack in this stock, because if you look at the long-term charts, that continues to be extremely bearish. So the possibility of the lows being tested is not ruled out. So I would say that yes, there is going to be further selling pressure in this stock.
Okay. A few others which are in focus today, and while we're talking about gainers like L&T Finance Holdings, etc., IDFC First Bank has had a fairly decent run in the last 7 days, about 10% uptick. So do watch out for IDFC First Bank, and it's about 5.5% up in today's session as well. And stocks which have corrected, I think Gurmeet spoke about Ashok Leyland being an idea. That one is down about 3%. Glenmark is down about 2.5%. And the entire ADAG pack is awash with red. But a stock which might have a fundraising announcement this evening is RBL Bank. We've spoken at length about yes. RBL is down about 2.5 at 372. Would you, going into the weekend, enter into a trade on this one, Kshitij? RBL Bank at about 372 rupees.
See, on a technical parameters, stock is currently facing a hurdle around 385 levels, where you can see the 100 days exponential moving average is placed on daily charts. And once this level 385 is taken out with a decisive move, I believe the upside potential cannot be ruled out in RBL Bank towards say 410 to 420 levels on a positional basis. But yes, on a downside, till the time we are maintaining above 355, 360 odd zone, the stock is currently trading into in a bullish zone, and once a move towards above 385 levels, yes, once again the bulls will take over the control over the prices, and the stock can move towards 415, 420 in coming sessions.
Okay, a few banks have come off. Canara Bank, for example, 2.5%. Federal Bank, for all this belief about how the subscription to Catholic Syrian Bank would drive Federal Bank activity. While that subscription was great, Federal Bank has come off in the session today, and even before that it didn't really go up too much, went up to 90 and currently correcting about 2.5 odd rupees. Amar, any thoughts here on some of these mid-sized banks, Canara, Federal?
Federal Bank is looking slightly positive, but it is witnessing some sort of consolidation, because what we are seeing on the charts is that somewhere around 92, 93 is a very crucial zone of resistance for Federal Bank, because even on the long-term charts we see that that's a crucial zone of resistance. So till the time we don't see the stock consistently trading above 92, 93 odd levels, I would say that it could remain range bound. However, what we are seeing on the daily charts is that the stock now has got some good support zone coming around 84, 85 odd levels.
Okay, stocks which are not doing well, and I think Dish is right up there. By the way, this is an FNO stock, keep that in mind, but 18% lower for Dish TV, 12.3. Something's gone awry out here. The Z Group is correcting and having its biggest intraday fall today after correcting 13-14% in the week gone by. There's something that's happened out here. Can't place my finger on that, don't have information about that, but there is some serious downtake out here. Z-Learn too, if I'm not wrong, is trading with cuts. Z-Learn, Z-Media, okay, not Z-Learn, but Z-Media I think, okay, I'm correct out here, but Z-Media I think is, okay, down any which ways. But Dish TV and Z Entertainment certainly down there. Last but not the least, from among stocks which are doing well, and Amar, a quick view out here, the future group stocks, future enterprises, future consumer, the future retail DVR, everything is up and active. Any of these names?
Yeah, I would say that if you look at the future group, future consumer is one stock which seems to be better placed. But again, what we're seeing is that after the sharp rally from almost 22 odd levels to a high of 29 today, these are resistance levels. So ideally, future consumer, one should look at booking profits, because if it is not able to take out 29.30, we could witness some selling pressure, because the long-term trend still remains negative, extremely negative for future consumer.
Extremely negative long term, but well, I think if we can use the term negative today, it is for the markets, it is for SL Group stocks, it's for India Bulls, it's for Yes Bank. Almost all the heroes of last week or the week gone by as well have suddenly seen a bunch of profit booking. The market itself done very well for this week, but correcting today. The banks though are shoring up a little bit of those losses and ending only 0.5% or thereabouts lower. The mid caps and the small caps too would have turned. The index was very, very active and now cooled off completely, the mid-cap index at least. The small caps still doing okay for themselves. What about the large caps though? I'll lay that out for you first. Bharti Infra, very volatile stock, up 7%. Adani Port and the entire Adani Group, I'm sure Deena will speak about some of those names. Bharti, HDFC Bank, NTPC and BPCL are the gainers. But look at the losers. Z, almost at the lowest point of the day. Yes Bank, 3% lower after being 4% higher. HUL down 2.5%, M&M down 2.5%, Dr. Reddy's is down 2.5%. His weakness is SBI, weakness in Reliance Industries, weakness in Axis Bank as well. So a clutch of stocks under a bit of pain in the session today. Deveena, what about the broader end of the spectrum?
Well, we've seen the mid caps and the small caps suffer as well in today's session. So both the indices are down out in the red. We've got the mid-cap index actually just about flat. But what's doing well, I want to quickly highlight a few stocks. Adani Transmission, for one, is up and about, and the entire Adani Group stocks are up and active. So you've got Adani Green, which has continued to do well. Adani Power in today's session, Adani Gas, all of these names to keep an eye out on. Adani Green is up 4%. Gayatri Projects is the one that's closing with gains of, last 2 or 3 trading sessions, it's got heavy gains, and today on upper circuit by the end of the trading session. We spoke about the future group stocks, so future consumer, future retail at the start of the show were up closer to 8.5%. They continue to hold on to those gains. You've got future retail, though, that has come off a bit, but is still closing with gains of about 3.5%. Aside from that, NBCC, L&T Fin Holdings, the stock, 3 to 4 trading sessions of good gains coming for L&T Fin Holdings. A lot of positive chatter around brokerages as well, and that stock is closing the day with gains of about 5.5%. IDFC First Bank, Magma FinCorp, another favorite there. The last 1 week has been good for Magma FinCorp. And now you've got some of these public sector enterprises coming back into action. So Container Corp for one in today's session doing okay for itself. Then you had ITDC doing okay. ITI rather is the other one that closes with gains of about 3.5%. What didn't close with gains is Dish TV. That saw a massive knockdown in today's session, closing with losses of 20% by the end of the trading session. Indiabulls Housing, Indiabulls Ventures, Indiabulls Real Estate, so the entire pack on the pushback and the adjournment of the plea has now gone down massively in the session. You've got Motherson Sumi, PNB Housing Finance, these are the names which are looking weak. JSPL had already seen a run-up in the last few weeks for JSPL. Good news, the stock has moved up, so profit taking coming into JSPL. And then Network 18, buzz with activity on the kind of interest that, some of the company is getting with regards to the Times Group. That was a Bloomberg exclusive that we got to you yesterday. And that stock today sees a little bit of a pullback to down about 3%. So today's session, the first day of the new series, the December series, closing with a cut of closer to 1%.
Yeah, just before we start talking about the markets, if we can have the intraday of Z Entertainment, because that stock has ended even lower than what it was when we were marking it. Look at that, it's an 8% gash at 286. Devina was marking Dish as well, which was down 20%. But this is some serious selling that has happened, and either bad news or the fund house selling or something else that we don't know as yet, or might come to know later on in the day, because this is just remarkable selling. This is not just, I don't think this is just pure and simple short.
It's 35 million shares.
Yeah, this has to be cash-based selling that has happened, Devina, as a result of which this stock is corrected, and corrected quite viciously. And therefore, for the week as well, it turns out to be a case of sour grapes. Well, for all those who bought into it thinking that another deal has happened, therefore it's good times ahead.
20% this week.
Cut for this week gone by.
Yeah, that's a real sorry state of things. But even for the index, let's just quickly pull up the weekly performance to see what the Nifty 50, the Nifty Bank has done, as well as some of the individual movers. So while the series ended positive, even the week is not bad, about 1% higher for Nifty, the index. And what's gained is Bharti Infratel. Through its ups and downs, it's finally got a close of 17% in the green. IndusInd Bank, UPL, Tata Steel as well. Yes Bank up about 5.5%, and JSW Steel along with that, and even State Bank of India actually 4% higher. What didn't do well and adding to those losses today is Z, Larsen and Toubro. Remember we spoke about how the order book is suffering, and then you've got Power Grid, Cipla, Wipro, all of them looking under.
The broader end of the spectrum as well, marred by losses to some of the SL Group companies, and I think Dish TV would probably be there. It's not a part of this index, and therefore Dish doesn't feature here, but otherwise it's had a torrid time this time. What's also had a torrid time is some of these PSUs like Bharat Heavy Electricals or Bharat Electronics Limited, both of them correcting a bit in the session. PNB Housing Finance, courtesy today's fall largely, by the way, for PNB Housing Finance is down in the session. There's weakness in Manappuram, Castrol and Alchem Labs.
All right, that's what you've got in terms of the losers. The gainers, though, Future Consumer today, that's got the big chunk.
CCI clearance working well.
Yes, that's an Indiabulls Ventures, though saw a little bit of pressure in today's session. but was backed by good pricing action of the week. LIC Housing Finance too has creeped up 10% higher.
Yeah, and Aditya Birla Capital has had an interesting week after the Z deal has been done. So good going here. Very quickly, the small cap index, if we can pull up that and see what's happening there, as opposed to, the Nifty small cap should come up on your screen in just minutes from now. Equitas 17%, Ujjivan 12%. Some serious gains for Delta Corp this week, above 9% as well in trade. But yep, Dish features here, Devina, and down 25% for the week.
Okay, let's get into those closing thoughts then from our technical experts. Kshitij, let's begin with you. Come Monday, what is it you're going to be watching out for?
See, as if I have said at the start of the show, this is a kind of a profit booking I am looking for in today's session, as the Nifty has, manageable to hold about 12,000 levels in today's session, which is a good signal. And if I talk about the Bank Nifty as well, it has, however, managed to hold on above its crucial support level of 31,900. So as far we are maintaining above 12,000 levels in Nifty and say 31,500, 35,600 in Bank Nifty, I'll keep my stance bullish on both of the indexes. And in coming week, I believe some consolidation phase will likely to happen in both the indexes, and we might witness some kind of a stock specific action. And from the derivative front as well, we need to wait for at least 2 to 3 trading sessions, like how the open interest is building up into the Nifty and Bank Nifty both. Till then, I believe the stock specific action would be on radar, and the pharma counter and the banking counter would be the outperformer in coming week.
Amar Singh, your closing thoughts?
Yeah, I would say that Nifty continues to remain positive, and the point which I had underlined earlier was that there is a bearish divergence on Nifty. So one needs to be slightly cautious. The range to watch out, immediate range is 12,000 on the downside and 12,150 on the upside. So we could see some selling pressure, and higher levels, there could be some profit booking as well.
Okay, gentlemen, we'll leave it at that. Thank you very much for joining us this afternoon, Amar Singh as well as Kshitij.
Thank you.
All right, and on that note, we're done here on Countdown. From Neeraj, myself, and the entire team that's put this show together. Thank you so much for watching, and have a great weekend.